Right, aloha mai kako. Thank you, Ellen. Thank you for having us. I'm super excited to share this space with you all today. As Ellen said, I'm Shayne Wolfe, the investment manager for Liliʻuokalani Trust. I am so stoked to be here with these panelists. So just to start it off, Ellen gave the brief intro, but I wanted to just start from the very top, maybe Mark and then Donavan. Can you folks just give us a quick elevator pitch of your funds? What are you folks doing and looking at?
Sure. So we are based here in Hawaii. We are an early stage fund, meaning that we invest at the seed and Series A. About 50% of our capital is earmarked for the US, and we definitely like to invest in Hawaii companies. The other 40% is sort of spread around Asia. We get Singapore, Hong Kong, Australia, and then we do a little bit in the Middle East. Our thesis has always been in financial technology, and anything that is a transaction is where we like to play. But along with that, we invest in deep tech companies, so pure infrastructure around blockchain, AI, quantum, all the things that are sort of in R&D stage and where they can get applications to use across the world. And then where fintech and deep tech kind of overlap, and there's a climate sustainability program, then we like to invest in that as well.
Aloha mai kako, o Donavan ko inoa no la na I mai iau a ka ke amnawa no au I Kaneohe fofo. I'm Donavan Kealoha, originally from Lanai. I now reside in Wahiwa. I'm a managing director of an early stage venture capital firm called Startup Capital Ventures SBI Fund. Early stage investor, about $80 million under management. We are actively investing out of our third fund, which is actually a joint venture partnership with Japanese financial services firm called SBI Holdings. I like to tell this story because it's a cool story. SBI used to be called SoftBank Investments, but we kind of split, or they split. So SoftBank Investments is kind of with Masa-san is doing its own thing, and our partner SBI Holdings with Kitao-san is doing quite well. They're a pretty publicly traded financial services firm. They have $1 billion fund back in Japan, have invested in a number of crypto startups. In fact, I think they were one of the largest investors in Rippling. And so we are actively investing out of our third fund, early stage, so think seed, Series A. We are generalists, although we have a preference for financial services, given our legacy. Our founder of the firm was a guy named John Dean. He was previously the CEO of Silicon Valley Bank. That used to be cool to say, but not anymore. And enterprise and SaaS, and then this category that we call deep tech, and it's almost like kind of an opportunistic category that we get to look at different kinds of technology categories. And so we've done investments we've looked at investments kind of all over the place, although now AI seems to be permeating everything now, and so it's our fun, yeah. We've done, across the three funds, we've done 9 investments in Hawaii. In our third fund, we've done 3 investments in Hawaii, happy to say.
Amazing, thank you. And so since we're here to talk about blockchain and crypto, Donavan, I wanted to start with you. In all industries, there's peaks and valleys. In crypto, we have summers and winters. How are you and your team viewing the current funding landscape? What are you folks thinking about, and what's the data showing?
Thank you. So I sort of intentionally mentioned that left out blockchain. It's not necessarily a category that this fund that we're looking at. And so in terms of seasons, right, you can say it's seasons aplenty for everything in AI. And so in preparation for this panel, I actually took a look at some of the data. And so in quarter 2, and probably may already know this, but I think it emphasizes the point of how so much of a gold rush it is in everything AI. And so in the past quarter, as reported by PitchBook, nearly $25 billion went into investments into things AI. And in crypto land, $1.5 billion. Now what's interesting, that same report talked about median valuations, right? So not whatever is in the middle. There's big investments, there's little investments, but the median deal size, median valuations for pre-money was $38 million roughly. And at the early stage, meaning Series A, Series B, little over $120 billion. And so I guess if you think about implications, right, not enough money going in, but the round sizes and the valuations are getting bigger. And so you can think about selectivity, scarcity, even commanding premiums for those companies that are doing crypto things that are exciting. And then I guess I don't have to tell you guys, but pretty big thing happened today with Gemini going public. I think in this past year we've seen
Circle, Bullish,
Circle,
yeah, probably.
yeah, Circle. And then I think there's like 3 to 5 other IPOs that are. And so in terms of action or where the demand or the pull is coming from, definitely on the exits.
Yeah, thank you. And Mark, just to build off of that, what's your thoughts on the funding environment and then also just how the space has shifted over the last 3 to 5 years?
Yeah, it's a great funding environment right now, particularly for blockchain companies, crypto companies, because of the regulatory movement that's happened and the shift that's happened, not just in the US, but across the world. And we love to see these things. So there's a saying, I'm not a hockey player, by the way, but that saying is you skate to where the puck is, not where it's at. So we've always tried to be where the puck is going. And, we've prepared ourselves in our fund to look for these regulatory changes. We knew they were going to come. It was a matter of time. And so to put capital to work in that space early is what we've been doing. Now, that being said, we're also lucky in the sense that because of the last winter, valuations for crypto companies actually were more moderate, I would say, versus AI companies, which have a whole big premium to them. The challenge with that is when you get these depressed valuations or like what looks to be very attractive, what we're looking for is how fast those companies can grow. So it might be a great price, but if they can't have a speed of revenue that catches up to a next sort of level of valuation where we can then take money off the table or find a better pathway, lower risk for exit valuations, and it's going to be hard for us. But that being said, it's kind of nice sort of crossing point where we get relatively good valuations. We're seeing now a higher adoption, higher speed of growth, bigger TVLs and different exchanges and so forth. So it makes for a very good buying opportunity.
Maybe if I could double tap onto that, I think like with respect to just financial services in general, just the trend, I guess, or what we've been, when the new administration sort of was voted in, there was just this excitement, I guess, with respect to regulations being loosened, so there could be more innovation happening, and indeed, I think we're starting to see that. So I would just echo that.
You navigated that really well, by the way. I was wondering how you were going to do that. But you're right. I mean, when you see, so my partner in our fund, he was one of the original authors of the Jobs Act for crowdfunding. So the reason why we have crowdfunding today was because of his work putting that legislation together. Because we do investing across Asia, one of the things that we did in Hong Kong was that we petitioned the government there to allow GPs, funds like us, to be able to set up funds with a lower cost of operating and a lower tax implication for our returns. That brings more capital back into the system. Crypto is a very different world, though, because there's so much capital at work in the system today. Finding where to extract value from it as an investor is much harder because you have very specific crypto funds who are using tokens as their investment vehicles. So the challenge for us is sort of regulatory is great, but we are still in a competitive environment with very specific crypto funds. And so competing in these deals, some of the larger deals or some of the more interesting deals is becoming a bit tougher. I don't know if you agree with that or not, but that's what I see.
Yeah. Well, thank you. And so just kind of double tapping into that. Yeah, no, it's great. In terms of the deals that you folks are seeing within the blockchain crypto space, what specific verticals are most attractive to you, given what you're talking about, the speed to revenue or speed of revenue growth? Any specific verticals that come to mind? We talked about AI and crypto intersection. What else?
Yeah, so with AI just growing and proliferating, I think presents the need for like identity. And so, cybersecurity is one of those evergreen kind of topics. In fact, it's a point of excellence, a point of success for our firms. And so we're always sort of, no matter where we're investing and thinking about cybersecurity deals. And so I think with respect to identity and as it relates to Web3 applications and, protecting against airdrops and cyber resistance, I think with the proliferation of AI, there's going to be a need for those better kinds of technologies and companies that are leveraging those technologies to be able to solve those problems. And then, that's where I think a lot of opportunity is.
Yeah, I agree with that. I mean, when we first started looking at crypto, which for us as a firm was roughly 2015, 2016, but we didn't really get serious about it, honestly, until about 2017, where we made an investment in a platform called Paradigm, which is now one of the larger institutional grade liquidity platforms for derivatives. And it's done phenomenally well. So that was then. Now, and then we were thinking that this is a technology trying to find a problem versus what we traditionally see, which is a problem where technology comes to bear. So fast forward to today. Now we're seeing things around programmable finance, and we love that. I mean, we think that's really smart. You know, not just smart contracts, but it's like a smart contract on steroids for your whole financial life. We also see, but we still see gaps in infrastructure, meaning we want to see more institutional grade solutions come to market. And so earlier, there's a couple folks talking about a shift from Web 2 to Web 3. It's the same shift in crypto. We are finding that bigger and bigger institutions want to do more in the space, but to do more in the space, they need to have TradFi infrastructure. And so we are not ready to announce our latest investment, but we are close to helping a company that's solving that bridge.
Maybe, if I could, related to this notion of infrastructure, in the last 6 to 8 months, we've been just inundated with companies that are bringing agents to market. And so we've got an agent for this and an agent for that. And so I was just kind of going through our deal log, and with respect to agent transactions, right? The traditional infra, as I understand it, even from taking a pitch, is not going to be able to handle that. And so that's where the opportunity for crypto presumably is. In fact, we were looking at a company that was promising to bring that, and it was just like kind of mind-bending because I was trying to figure out all these agents, and then you add in this layer of e-commerce, and then you got to factor in identity. But like, just today we got a deal and taking a look at that, maybe an element or maybe a different take on it, and so I think that's also pretty interesting.
Amazing, thank you. And then so to kind of just bring it back down to home now, so being here in Hawaii, I'm curious, with Hawaii's unique challenges, cost of living, the regional isolation to any large other land masses, but also we have strengths here with our renewable energy tech, ag tech, and our space between North America and Asia. Are there any specific opportunities in Hawaii that this type of technology is addressing now, can address going forward? I'm curious what you're seeing, both of you. Maybe start with Donavan. You have anything?
I would say start with Donavan with you would know it.
I guess that's why I'm here too, right? I'll be honest, I am a tourist investor in this space. It's funny, we have this joke about how, so I split my time between here in the Bay Area and when, right around COVID time or after COVID time, there was just a lot of cash that flooded in, and so you make this joke about tourist investors that they don't know what they're doing. And so, admittedly, I'm kind of new, and I guess that's why I'm here, is to learn, to just see who is working on some things, and then think about application with respect to our home too. And then I like the previous speaker talking about the places, how things were happening here, and so as it relates to our indigenous communities, right? How could we leverage this technology for those purposes? I think it's sort of a kind of a fun thought experiment to just think about those kinds of things. But I think maybe that's the call out, right? The call to action amongst the founders and the entrepreneurs in the audience to bring those things, make it compelling enough so I can write a check. Yeah, money burning in my pocket to write a check.
Yeah, I'm with you there. I mean, we have not seen a lot here locally, and it's not for lack of talent. Right? We have super smart people in the space. We have the talent. It's a bit hidden, to be honest, and I think that's part of the problem. We get a little bit too complacent in our work from home lifestyle. I am guilty of that for sure. And so what I think might be missing, as sort of an extension maybe to your question, is we need a studio, we need a venture studio, we need a gathering place. And with that being where a lot of us can come and hang out and be part of that community, we hear that word a lot today, I did hear Venture Studio earlier, I think, on the last panel, and that's kind of what sparked this. But it's more than that. It's where these individuals can come and also have a sandbox, and that's also what's missing. So the second part of it is, why has blockchain taken off in other regions? And I'll use Singapore as an example, city-state. I mean, we're much bigger. I think we're way more beautiful. Sorry, Singapore. I spent a lot of time there. But one of the things that they did, that the government did, was they put together a sandbox that allowed people to test out the technologies using sort of anonymous data sets and put things to work, and then allow folks like myself and Donavan to come in and actually try these things out and see these companies at work and see what impact they were having and what the reaction were being from the customers. So I think we're a small enough state in a way that we can build a really powerful sandbox here. I'm not the guy to do it. Maybe we should talk to Senator that was on here earlier.
Yeah, thank you. And so kind of an extension of that, you really can't talk about blockchain without talking about regulation. I'm curious, maybe to you, Mark, how has the progress within the space on the regulation side, how does it affect your folks' strategy and the deals you're looking at and the opportunities you're searching for?
Yeah, it's a positive movement because the way the regulation has changed will show an increase in adoption. Now, to what size, nobody really knows, but it lowers the barrier to entry. And a lot of our thinking in terms of how we think about whether we're going to invest in a company or not is the right market mechanics lowering the barrier to entry? Are we getting rid of friction at different parts of the process? So it could be a infrastructure play, it could be a transaction type system, it could be a tokenizing of certain assets. But if you can lower the friction amount to get to an end result, then I think that's a positive outcome. And so that's where we see regulation helping out now.
Thank you. And I'm curious, maybe again to you, Mark, but Donavan, if your LPs are also kind of thinking this way, do you folks get any questions from your LPs, your investors, on thinking through regulation and any pressure on having specific approaches to it? I'm curious.
Yeah, so we have a great mix of LPs, and for those of you in the room who don't know what an LP is, those are the institutions, family offices, sometimes individuals, or corporates who actually put money to work with us as a venture capitalist firm. And so they are our investors. And so we have a bit of an interesting mix with certain of our LPs who definitely do not want us to invest in tokens because they don't have the infrastructure to manage custody. Because if I get a token, I'm going to distribute it back to my LPs. Like that's probably be the first thing I do. But if they don't have if they don't have a custody solution, if they don't have somebody who's managing that treasury, then it becomes really hard for them. And honestly, it comes hard for us too. I mean, we're not the largest firm in the world. We don't have a back office of 20 people who are going to manage a bunch of tokens. That's not our business. There are better firms more equipped for that. And so we always struggle with saying, hey, there's a great company. We love the company, but they want us to buy the token. And it has these, maybe preferential rights, whatever it might be, may not be a good fit for us. So we tend to avoid those companies.
Maybe not so much on the regulation side, but in terms of getting a taste or just seeing like what the future looks like, that's maybe what's being asked of us by our big Japanese partner. Like I said, they are a large financial institution, $1.5 billion or something like that, fund back there in Japan, and so and crypto is sort of a point of emphasis for them. So if you just take a look at their portfolio, there's a number of different companies that mentioned. I mentioned one at least earlier, and so it's not necessarily like, it's more of just like surfacing it and sending it over to them. But I gotta say, like AI has just been just creating a lot of whitewash, right? That is hard for a lot of companies to get out of, and maybe to tie it back to other companies, right? We've got other companies in our portfolio that are like traditional enterprise and traditional SaaS and doing well. But just the activity and the excitement, maybe FOMO that's happening in AI is just creating a lot of difficulties for those companies, those traditional types of tech companies.
Yeah, thank you. And then to kind of dig further on the AI side, we spoke about it earlier, but the intersection of AI and blockchain, can you folks just share for some of us, like what are some of the compelling use cases that you're seeing within that space, and then other verticals, just thinking about recent trends, the deals you're seeing, what's specifically standing out to you, and what are you going after? Maybe to you, Mark.
You have to be an LP for me to tell you about that.
Fair enough, fair enough.
No. So we are seeing AI in payments and a full workflow where it's absolutely necessary for them to rely on blockchain, or rather, actually, blockchain technology plus crypto, which is the combination of saying, and I'll just use this as an example, where does an AI get its data from? Right? How does an LLM know where to get that data? And then how does that LLM pay for that data if it's through a paywall? Well, the best way to do it is through a programmable, finance with a blockchain solution using crypto to buy it just on a transaction basis. I need this article from the New York Times. I got to get through a paywall. I got to do it quickly and fast. And so we like solutions like that. We think they're super fascinating. It's sort of empowering LLM using crypto as the back end and blockchain as the back end.
Yeah, I think I mentioned that. So those agent-to-agent transactions that are happening, and that will continue to happen, right, as these things just become more normal, and then like the payment mechanisms and all that goes on with financial transactions, how crypto plays a role in that. It's interesting, and I mentioned identity. That's another thing. I lost the thought.
Identity is actually a really big one because the ability for an institution, the amount of money it costs an institution, by that I mean just your local bank down the street too. It could be a credit union, so it doesn't have to be that large. To identify an individual is a tremendous amount of work, let alone cost to them. But you can use the blockchain to actually simplify that if you can rely on a bigger bank or another bank's ability to identify that person before. So I think identity is a really big area. Yeah, we haven't seen much though in that space. I have to rely on you. I'll have to call you later.
Yeah, thank you. And back to kind of the earlier question, maybe it's not specific to Hawaii, but one thing that I think is a technology or a tool that could be useful here. A lot of our economy is based on real estate, so the tokenization of real world assets. Are you folks seeing opportunities in that? Is that of interest to the fund right now? There's so many opportunities elsewhere. So either that, or I also wanted to pick your brain on stablecoins. We were talking about stablecoins earlier, and stablecoins versus CBDCs. Just if you can share a bit about how your company, Mark, is looking at that space, and how do you approach it from an investment standpoint?
Yeah, I don't want to touch the tokenized asset space too much because that is an area where we've looked hard and deep and have never come out on the right side of that asset. But there's value in it. I've not yet seen the maturity level and for a variety of reasons. But on stablecoins, super excited. Like, I think there's a huge opportunity there, not just in treasury management, which is where a lot of corporates, particularly even some of our own LPs, are using stablecoins now as treasury management for some of their businesses, but in payments as well. So we have a Australian-based company that's going to launch here in the U.S. Actually just launched here in the U.S. as well, and it's a loyalty payments company, and they started taking stablecoins as well, and they're able to allow merchants to then get into stablecoins, not just for their customers, but as building their own treasury. So I think that product is exciting, and there's a lot of good use cases for having it, and it's also why CBDCs haven't actually come to fruition the way the governments thought they would. A lot of governments were promoting their own effective token and their own currency, digital currency, but they haven't been able to deliver on it because already there's such a good infrastructure around stablecoins. There's such deep pockets and treasuries in them from great providers that they haven't needed to. So I'm a fan.
No comment on the tokenization, although from an investor perspective, just intellectually interesting sound to me. Maybe an anecdote with respect to stablecoins. So we actually looked at a company that was using it, not necessarily taking it in, but using it as part of their way to settle transactions, cross-border transactions. And so Yeah, that was one application that I saw was interesting.
I think the cross-border transaction space, I don't know, we see so many companies doing cross-border transactions using stablecoins, using digital currencies. It's a mystery, it's a puzzle to me, and I'm hoping somebody maybe will teach me later what separates one from the other, because we've literally seen about 30 companies in that space. And
This is why I stopped and let you pick it up.
yeah, like I need to learn.
Yeah, thank you. So an interesting topic that our team has been often thinking about, when I think about traditional venture capital, there's usually implied a very long time frame of what, at least on the fund side, that these LPs invest in, what that looks like. But with the opportunity to invest in tokens, the opportunity to invest in protocols, I'm curious if you folks think of the liquidity time frame on blockchain companies differently than your other typical venture opportunities? And if so, how should LPs think about it in terms of modeling?
So in our investment committee, when we sit around to debate whether we're going to put money to work in a particular company, we have a very structured decision analysis kind of framework that we like to talk through. It allows us to kind of remove a lot of the biases you might have with a founder or with a space, with a sector, whatever it might be. And as we walk through that, when we get to the end of it, it is how do we think about the exit scenarios? Is this going to be a token sale? Is this going to be a traditional IPO? Is this an M&A candidate? And if it looks like it has a higher probability to go down the token side of things, the calculus in our mind changes very quickly, because the speed to do that is not necessarily based on the company's performance. They could be killing it in the market, but if it's a crypto winter, it's not going to happen. This is not crystal ball thinking, but it leads us to go, are we relying more on so much more challenging outside market forces, whether it's regulation, whether it's in country, out of country, and then it sort of creates a barrier in our mind and in our decision analysis to how do we get over that hump? What can we do to move this particular company over that? Do we have the resources, the team, the network to actually empower that company to get through that winter? How are we going to advise them? What are we going to tell them when things go wrong? And so we're really trying to think deeply about it. This is a long-winded way of saying I don't have an answer, but it does play in our mind.
What do you think about like maybe secondaries as an exit opportunity for these? Because I was thinking about, as you were asking that question, I was like, wow, when was Gemini started? When was the other one started? Because in our traditional types of business, right, you can look at the data and there are median times from this funding round to that funding round to this funding round. And so that's like the frame of reference with which we have. And then we have sort of a set time period for our funds, which is 10 years, right? And so you're working within that context to try to identify the right companies, help them enough to get to that point of exit. And so I don't know if that applies to crypto, but with respect to secondaries, and I don't know how much you guys know of that, but that is like the exit pathway that has become kind of in vogue, given that IPOs are maybe up until not the preferred exit route, I guess.
Yeah, that's interesting. I mean, so I'm in this position now. It's like you're reading my mind, Donavan. So we have a company, and it is releasing a token at the end of this year, and we've been asked by a pretty big corporate to sell part of our token holding. And it's a pretty easy win of maybe, let's just say, between 5 and 10 million. Okay, sounds great. That's not going to move the needle in our fund, and I'm going to give up a ton of upside potentially if the token does well. So then what do? You go back and you look at the history of tokens. How have they performed? And it's not great, by the way. I mean, if you really look at the last 2 years of token sales and the time window between when they actually launch and how they perform 6 months or 12 months later, it's probably better that we take some money off the table. But you're in conflict. And so secondaries, absolutely, I think it's a great opportunity. And there's a lot of folks who want to buy those secondaries. So I definitely think that's a good way to go.
Awesome, thank you. And so to kind of flip to the role that you folks play when you're looking at opportunities and being pitched, I'm curious, and I'm sure many founders here are also curious how to stand out when speaking to folks like you. So I'm curious, what are some of the main mistakes that founders might make when pitching to you folks? Yeah, I guess generally with any opportunity, and then are there specific things on the blockchain side that you're seeing challenges with?
I would say not a founder mistake, more our mistake in understanding the space. And I think that's the biggest lesson learned. We're not experts in the space, you guys are. And so so if you bear with me for a moment, I'll tell you a bit how we think. In most cases, we love to see founders come out of the left field, meaning that they're coming into a space where they don't have any domain expertise. In financial technology, you do need some domain expertise, or it's going to be challenging. And so when you look at our founder profile, you end up seeing a well-balanced team. We have somebody with deep domain experience and then maybe an engineer that never worked in the field. As we started to invest in blockchain, what we found was everybody was coming from left field. Everybody, because it was such a new technology. Nobody had deep domain. There was no such thing. We didn't have that history. And so we were having to figure out how to make smart investment decisions based on these founder profiles that don't necessarily fit what we're commonly trying to see. And so we really had to do two things. One, we had to take off the blinders and kind of open our mind to, is this the right founder and how are we thinking about this founder? But two, we had to find outside resources to help us test that technology, to validate it, to give us third-party opinions unrelated to investments. And so we found a group that helps us run through the technology stack, test the technology stack, become a user effectively, and then give us a report back as to how they think about it.
So maybe just to give you some inside baseball, right? Like Mark's firm, our firm, probably takes a unanimous decision to get a deal done. So that means 3 partners investing yes on a deal. And given where we are at in the fund and in my career, it's a lot going on. So I've got 2 exits that I'm working on right now, another deal that I'm working on. I'm here. And so all that to say, deals are coming in. It's hard to suss out. You just don't have the time. And so maybe a message is to be inevitable, to be indomitable. And that goes back to his point about team. So one of our most recent deals, it was a stellar team. Pre-revenue, but just stellar team. And so you know that they had some success and they're going to figure it out. And so that kind of cut the noise. And then you can kind of get into all the diligence and that kind of thing. And so, yeah, to the extent that you can demonstrate inevitability, like that picture of Thanos, forget the part about when Iron Man puts the glove back on, but I am inevitable. You can kind of see it, right, when the deal comes in. And so, yeah.
Thank you, yeah. I like that, inevitability. Thank you. So kind of just playing off the advice that you just gave to some founders, I guess we only have a short amount of time left. What advice would you give to, if you could leave one piece of advice with the audience from any perspective, so founder, investor, other VCs, even just folks within the regulatory space here, maybe one piece of advice to leave before we head off stage.
I think the best piece of advice is just try to make your customers happy. Like, don't worry about the rest. If you're building something and you're in the process of building it and you put it in the hands of somebody and they give you feedback, take that feedback seriously and try to build something that they're absolutely going to love. Because we talk to them. Like, we will talk to your customers. We will see how they're using it. We will get to know what the value proposition inside and out. And if they're kind of 50-50, then I'll probably be less so. So just build something that not just you love, but your customers love as well.
I kako that 100%. I think like when we're looking for indications of traction or why pay attention to this one vis-a-vis this one, it is ultimately down to revenue. Yeah, it is like a proxy for how successful the company is doing. And it goes back to customers. How happy are your customers? Are you creating something of note, of value? And relatedly, when we were going through diligence with this company that's arguably crypto adjacent, that was one of the, maybe the things that stuck out in my head when we were talking to their lead investor, which was a crypto native VC firm, just the speed with which this excellent team produced features and shipped features of a product, which just accrued and compounded the value of their solution, which made their maybe not customers, but partners really happy. And so that is, I guess, maybe just to, I like hanging out with Mark. He's a super smart guy too. So.
Amazing. Well, thank you all for being here. Please help us recognize and applaud Donavan and Mark for the founders out there. Please find them, pitch your ideas to them, and tell them why your company is inevitable. Thank you.